Hey, what's up, YouTube? Back in another video, and today I got a little treat for you. I got something called Titan. So, what is Titan? Titan is a company that's new. It's a hedge fund. It's basically a hedge fund for the masses, for us, for everyone who wants to basically get into the Amazons or the Googles that can't just afford it. Um, so, Titan recently released about a month ago, and it's very similar to how Robinhood operates, whether via the mobile app, right? So they have a really good, strong application, iPhone, Android. You can download, you can sign up for free. There right now there's no referral bonuses, but hopefully they'll add that. But I'll put a link down below to check it out. So Titan basically the way it operates, it's more like you put money into it, right? And they basically hedge for you. In other words, say you put so right now they have $1,000 minimum in order to get into the hedge. Um, you put in $1,000, they're going to take your $1,000 and give you pieces of stocks in their portfolio. So you can see here they go by sectors. So of course they focus on each different types of sector, and focus on the big kind of names and the ones that are the most performance based. So you have Apple, Google, Amazon. So you would basically own a piece of each share, and it's great because I like Google, I like Amazon, I like Apple, but they're expensive, right? Right now, I own 2 shares of Apple. I mean, because I don't have enough money to buy a whole bunch, even though I really think it's gonna, and for the long term, it's gonna go way up, continually, with performance. Um, but to get around that and getting a piece of the pie, Titan kind of offers you that. And not only does it offer you a piece of the pie, but it offers you a hedge features, which are basically protection. So say the market goes down, next couple of days, they're going to hedge for you. They're going to protect your assets. They're going to take short positions or long positions based on how the market's going, and they're going to say, okay, oil is real bad this quarter, so let's drop oil and go with something that would make us money, against oil, like I don't know, fossil or other type of fuels or something. But you get the idea, right? So basically, it's a managed account, and this is the great thing about it: 1%. 1% is all you pay. It's a flat rate for this feature, which is great because there's a lot of hidden fees when you start getting into hedge accounts and personal stockbroker accounts. I have a personal guy who manages some mutual funds of mine. You know, I honestly don't even know how much I'm paying him for that fund. I think it's probably well over 3%, and it's not really that much money, but you know everyone's got to make money, right? So how do they do that? So I think Titan is trying to take a piece and compete with the big players, right? By dropping the fees down to 1%, which honestly, with the computer age today, they probably are running a lot of algorithms and computer-based, AI that basically tells them, like, predictive models that say, hey, you should buy this. And at that point, they basically look at the material and say, okay, yeah, the computer's right. Let's buy this. So, the cost of getting to this is very low right now, and it's a great thing for folks who are young and old. You know, my parents never told me to invest when I was young. I think one of my family members told me that, and I never listened to them. And now I'm wishing that I got into something like this, where I put in $50 every paycheck and let it grow, and compound interest is there. Here you can basically put it in there, let it do its thing, and then check on it. Now, Titan, they update their portfolio, I believe, halfway through every quarter. I think they said. So expect every quarter to get an updated, at least one update on the portfolio. And what that means is that they would change their position. If they would change their position on a stock, it would be between that quarter that you would know. Because what they do is they file a public filing called a 13F, and that filing is basically for the public. And you can then, they post it on their website, but if you were to go to the government website, you could see that offering. But that is for their members, their hedge fund members, to know, what they're changing. So the cool thing about Titan, which is actually really interesting, is their performance. they're advertising that their performance is better than the S&P and overall market average. So, okay, well, if they're saying that they're doing it, you might as well, hop on the wagon and start, getting on, getting on there with everyone else, right? And that's kind of what I'm doing. I'm basically letting everyone know is like, hey, you should check this guy. You should check these guys out. It seems like they know what they're doing. So with that said, what about the guarantees and the kind of security and it's a new company, it's kind of risky, right? Well, they are backed by the government, so they are SIPC insured. And here you can see that there's their flat 1% fee, and everything on their app is encrypted. Now, granted, a lot of companies, especially in the IT sector, because I come from the IT sector, they'll advertise that they have the highest encryption, right? Well, think about this. I could put on this paper saying that I have the best encryption that's possible, right? Whether it's 256-bit or 512-bit, whatever. But they're not telling you exactly on this page how they encrypt, right? So an IT security person would probably say that, okay, are they going to encrypt it, from the device or on their servers? I'm assuming this is at rest. In other words, my data at rest is encrypted. Is the transmission of my data encrypted? And of course, I believe that if you go into details and they ask them all these questions, they'll say yes. Transit and at rest is encrypted. Okay, that's great. Okay, are the laptops on the employees encrypted? Okay, see what I'm getting at? So, be very careful on some new companies. Granted, Titan has a big backing, right? And I'm sure that they have done their due diligence in security. But it doesn't matter when you have a new company and they don't have a good security person or a compliance person that says, hey, you know what? I got a guy who's in a leadership role, really smart guy. I know he wouldn't do anything wrong, but he likes to travel to, different countries. Like, maybe he travels to Japan, maybe he travels to, I don't know, Africa or wherever. And all of this data is on his laptop and it's not encrypted because that's not a compliance that they follow. They don't share that with you on this kind of page. You have to really dig into them and ask them these specific questions. And they're probably not going to really tell you, they're going to give you some mumbo jumbo. But those are the kind of things that you want to think about when investing or just overall doing any business in any new kind of company. It's just standard stuff, I like to see more, but it's marketing. They're not going to go into too much detail. But keep that in mind. It's good to know. So just know that they're long-term focused. In other words, they're really looking at this as a long-term solution. So they want you to understand this is a long-term solution. This is not a get-rich-quick scheme, right? But if you put $1,000 in your fund now and you wait a year, if they're giving 13%, you're gonna make some money, right? So think of it as at least a target. So what I'm doing is I'm putting a target. I'm gonna give them a year, right? I'll put $1,000 in my account. I've already done it. All right. First week goes by, right? First week goes by because today's Sunday, the 26th. Monday is a new day for the market, and it's kind of in that bear trap time right now where we've hit a bull run for so long. Everyone thinks that it's going to crash sometime soon, and it could just be a small correction. Even if it's a small correction, Titan's going to get hit. But what's great about Titan is that they're hedging for you, so they're going to try and cover those losses. So I'll give them a year, but I'm going to give them 2 weeks, and if I can see a return in 2 weeks, then I'm going to be adding more. And what I'll do is I'll try and set up something where it takes out maybe $100 a month or $100 a paycheck to compound my growth, right? Because if I don't do it, I'll forget, and next thing you know, I'll be sitting at the same amount, relying on the growth of the fund. And if I do see good growth, then why not add? It's just going to get better. So I'm betting for them, and this is something I wanted to share with you guys and see if you're interested in it. I'll try and do some follow-up reviews and see how the market is doing, see how the portfolio is doing. My Robinhood account is still good. Now, keep in mind, Robinhood is completely different because Robinhood, you're owning a single stock, right? And if the share price goes down, it's all you, right? I mean, Robinhood sends you tweets saying, hey, this stock is down 5% or something. It's on you to sell that share, right? And if you wake up late and forget, next thing you know, you're on the bus and it's tanked even more, you're kind of screwed, right? Well, with this, you don't have to worry about that. So I'm still going to have my Robinhood account because it's something I like to do. I like to trade stocks and play the market. This is more of a, sit back and kind of, watch it grow kind of scenario. But just keep in mind it's new. I haven't seen much marketing material about it besides my friend telling me they have a Twitter page. Check out their Twitter. The co-founders here, Clayton, and I think there's someone else. They're pretty young. They're right out of college. They got some good funding backed by them. They seem like smart folks. I don't know the size of the company, but they've raised a lot of money and got some backing. So we'll give them a shot, So with that, I'll check you guys next video. Thanks.